Welcome, crypto enthusiasts, to the Independent Reserve Podcast.
All right, episode 29 of the Independent Reserve Podcast. I'm here today with Director and Chief Growth Officer at Redbelly Networks, Tim Bass. Welcome, Tim.
Thanks for having me. Good to be here.
Oh, man. So Redbelly Network is this... I know you're going to do the introduction better than I can do, but there's so much underground hype, if I can use that term. You guys are doing a lot of stuff basically in stealth, and it's all awesome, and it's everyone behind the scenes. It's all people want to talk about right now. I don't know how many times people have said, "Oh, you know, Redbelly's, if there's something big going on, somehow Redbelly Network in Australia is behind it." And
nice.
We were talking the other day about how, like, there's all this stuff about tokenization and on-chain activity, and how, there's going to be this, blockchains are going to be the infrastructure that powers capital markets, right? You hear the hype, but then you ask the question, well, who's the one who's actually building it? The institutional grade infrastructure to actually do things the institutions want. And the answer is Redbelly Networks. Right?
Yep.
And I feel like you guys are on a trajectory that, okay, right now maybe it's not getting mainstream attention, but at some point you guys are going to be like powering all the major institutional infrastructure in the world at some point.
That is definitely the plan. No, thank you for saying that. That's the plan.
That's the plan.
That's for sure. That's what we want to do.
Yeah. So look, we have to start from the beginning. Before we jump into Redbelly and everything you guys have done, let's start with yourself, an introduction, how you got into crypto, what drew you to the space, what's been the journey for you?
Well, look, sort of a self-confessed nerd, really. Even though I'm wearing a polo shirt, I really like a T-shirt.
Yeah.
But no, I was in IT services for 15 years before I made the jump into full-time blockchain. I actually started mining cryptocurrency in 2013. So a friend of mine sort of spoke to me about Bitcoin. There's a lot of people with this sort of story, but for me, coming from a sort of tech perspective, I really got excited about this sort of global computer. So if you think of what a PC is exciting, or at least it was for me at the time, and then you have servers and data centers and then clouds, private clouds, global clouds, and then you have this potentially interplanetary network, right? So yes, we're obviously on planet Earth, but if you read the IPFS white paper, you could have distributed storage anywhere on any node, anywhere in the universe, right? So it's kind of a very Elon Musk-like vision, and I got super excited by it. So, I was working sort of on Microsoft, VMware, Citrix, IT infrastructure for a long time. And then I basically built a bunch of mining rigs. So I had 10 video cards, I think AMD 280X video cards, and a bunch of rigs running in one of the spare rooms in my mum's house. And I would try and connect to it remotely every time it crashed and trying to make it work. So it was very kind of cyberpunk and kind of hacky, and it felt like early internet for me, which I kind of missed the early internet. So for me, that felt like the beginning of the next thing. And got hooked, and so went down the rabbit hole in 2013-14, and the rest is history.
You were mining Bitcoin at that stage?
I was mining Litecoin and Dogecoin.
All right.
Because they were script coins, whereas even then, the Bitcoin algorithm was way too hard for even like a PC or GPUs, so you needed specialist mining gear, which I wasn't up for.
Okay, nice. And so who was forking out for the power bill?
I was. So we know how much electricity is now in Australia, but in 2014, I got a $2,000 bill in for a quarter.
Right. No way.
Yeah. So it would have been like $5,000 now.
Yeah, right.
Yeah.
All right. And how did this all lead into, I guess the tech side is self-evident now, but the lead into Redbelly and...
Yeah. So to go right back, when towards the end of my IT career, I worked in a bunch of IT services businesses that were acquired and rolled up. So there was when the public clouds came along, there was a mass consolidation of the small sort of mid-market IT providers and private cloud businesses. And so I went through a number of these acquisitions as an employee and started to realize my view on the world was billable time. So I'd bill hourly rates and I'd be a sort of top billing consultant. But I realized the owners of these companies were doing very well from exiting. And so being an employee, I'm like, I'm not really sharing in that upside. So that's kind of a little frustrating. So what we ended up doing in 2016 was create a venture studio called Block 8. And we're one of the earliest venture studios building anything of note in Australia back then. and myself and our co-founders were all IT colleagues in our previous business. And what we did was we wanted to bring our expertise in terms of like commercial expertise, but also technical expertise to build or help build these Web3 startups, and we would invest in them. So this venture model is quite well understood now, but 10 years ago it was pretty novel. And so one of the projects we're sort of most known for, we worked with the Haven team, which became Synthetics. Mm-hmm. So we did a project with them in 2017. It was a very large, successful token sale, and they went on to do some big things. So that then opened the door for us to do a bunch of other things. Excuse me. And so that kind of sort of own the network value ethos was in our DNA, mm-hmm. which ultimately has led to us building a blockchain, of course. But on the way through, a bunch of our employees were attending University of Sydney, where our founder of Redbelly, Vincent Grimaldi, is a professor. Mm. And it was a really kind of an interesting time. Like all these really smart finance, computer science guys were sort of just finishing their degrees and wanting to build things. And so that's how we originally got the introduction into Redbelly Network and what an incredible IP it was. And I'll talk about sort of what it is in a moment. And then we're on a path. So we were building, investing, and just enjoying the ups and downs of crypto.
Mm. Yeah, because there's definitely, you see it all the time, there's definitely a real tie-in with the research that was going on with Sydney Uni and what you guys have built, right?
Yep. Yeah, well, so what we ended up doing, because we had done so many, we call it 0 to 1. So we would sort of help startups with their MVP. We'd put the first check in a lot of the time and help them go to market, and then they would raise a larger round, and then they kind of outgrow our business. They sort of have their own teams and tech capability. And, you know, we, being commercial and doing that a number of times, we were approached by the CSIRO about commercialising the Redbelly IP. So just to sort of explain, Redbelly is a consensus algorithm. It's a blockchain. And every blockchain has one, but this one's particularly novel, and it's a patented innovation that's an Australian invention. So it's the only collaborative, leaderless consensus in the world that's been formally verified. So every other blockchain in the world is probabilistic in terms of its finality. So when the nodes are competing for the next block because they want the block reward, that's adversarial, and there's a lot of energy, even in proof of stake networks, a lot of computation that's being spent on trying to win that next block. Well, in Redbelly, everybody proposes a block, which is a state of play from their perspective, and that then appends into a super block. And so we only generate blocks when there's actually something to do on the network. So it's extremely green, it's very efficient, it's very fast, and guaranteed finality is final. Right?
Deterministic is the
thank you. Yeah, deterministic finality. So what a formal verification means, for those who don't know, it's where you model check with a computer all the possible states of execution of the algorithm to see if there's any faults or any situation where finality is not guaranteed. And all the top blockchains have been trying to achieve this for many years, and none of them have achieved it. So what it means is settlement is guaranteed on our blockchain, which is one of the reasons why we're doing a lot in capital markets, because settlement is everything in capital markets. And so that's sort of taken this incredible blockchain that's very secure and final, but also it's very fast. So it's also the fastest blockchain in the world. So to give you an idea of speed, Ethereum does between 10 to 40 transactions per second. On mainnet, we've done 97,500 transactions per second. So 4 times faster than Visa globally per second, with guaranteed finality. So you can see why capital markets wants to use it.
Yeah, and I guess there's a number of things that stand out when we look at the details of like Redbelly. Obviously, the fact that you've tested to 97,000 now. Ethereum and Solana are duking out of like a theoretical max of 100,000, where you guys have already shown you can do the 100,000. But I think the capacity is you guys something along 600,000 or something theoretically.
Yeah, well, so that, I always kind of smile when I see that. Like you can go fast, but are you trading off finality? And the answer is always yes in blockchain, right? So the time it takes bits to move around the internet is a factor. The time it takes for light to move around the internet is a factor. So there is, limits to science, right? But even that being said, a lot of these other blockchains are sort of okay with downtime, okay with rollbacks, okay with time for finality guarantees. And that's because most of crypto is dealing with relatively low value assets, right? Like we're not dealing with super funds, and we're not dealing with, critical infrastructure on the ASX. We're dealing with, meme coins and stuff, right? And that's great. But when you start to look at tens of thousands of transactions per second, that starts to become an issue with these types of real world assets. We have done 660,000 transactions per second just with payments. So that's without the Ethereum virtual machine. So we've actually sort of got a lot more to do in terms of performance, but no one can use it, the entire bandwidth as it is now. So we'll keep that up our sleeve for a bit.
Yeah, awesome. And that's good to know. There's even more to come.
Yep.
But the interesting part for me, and I think the context is for most people who don't understand why this is important, that you guys are building, I guess, an infrastructure layer for capital markets. I think you use the term capital markets infrastructure.
Yeah.
And we're talking, and the ecosystem or the network you guys are building, I guess predominantly the notable cases are building bonds, tokenized bonds, private credit, I think you mentioned, commodities, these types of things, large amounts where finality has to be sort of guaranteed. Because you can't have rollbacks, and I guess the other thing, you can't really have, forks and all this kind of stuff. You need to have this immutable, like known rollbacks. Those decisions, there needs to be finality, and it needs to be immutable. Rain, hail, or shine, right? Because otherwise, at the institutional level, there's going to be problems.
Oh, 100%.
Yeah. Right. And so this is the part I find interesting about you guys is that the blockchain is fit for purpose for institutions specifically. It's not going to be so the types of businesses, and once I'd love to hear more about Project Acacia, which is I guess largely bringing this all together. You got Australian government involved, you got you've got the RBA involved, and a bunch of other Australian projects, which I'm looking forward to hearing about, just to show you the scale of what you guys are sort of building out. Where am I going with this question? I guess the purpose is I don't think there's any real competitor to you in that space specifically that will be really fit for purpose.
Yeah, look, we've been very deliberate about this. So, Redbelly was already the fastest blockchain in the world 5 years ago. But because, it takes time to get this IP out of the university, and with the joint venture that we ended up doing with CSIRO in Sydney took time, we finally got the IP and started building the production version in late 2021. And it was a bear market by that stage. And so being a fast blockchain was, enough to get into the top 10, certainly our speed, in 2017, but it wasn't enough in this cycle. So we were very deliberate. What's it good at? Who cares about finality? Who cares about speed and all this sort of stuff you've mentioned? And so we very deliberately went after real world assets, which is the term everyone uses in crypto, but capital markets. So just to kind of set the scene. So you've got public networks like Ethereum and Solana and Avalanche, and they're great. They're permissionless. They've got pros and cons, but they do a great job at what they do. Then you've got these private consortium DLT or distributed ledger technologies like Hyperledger and Corda and others. And they were really popular with institutional enterprises in 2017, 18, 19, when everyone got excited about blockchain, but couldn't use public networks because there was no privacy, right? There's no KYC, and how do I do my business on here and not finance terrorism through gas fees? There's a bunch of things, right? So everyone got excited about it and kind of put it back on the shelf. Now, we made the decision, because our network's so fast, that we could add a layer of KYC and an identity effectively, and use zero knowledge proofs, which is a technology to prove something without revealing the underlying information, to attest to your identity or your investor status on a public network without having to give away important information. So we're a public network with private permissioning on top. And so everyone on our network does a KYC and KYB process to join, and then it's just like ultra fast Ethereum, right? It's EVM compatible. All the stuff that works on those other networks works on us. So from a tooling perspective, we're backwards compatible with all the other blockchain infrastructures we love, Uniswap, all the DEXs, all the bridges, all that stuff works. But for asset issuers and the capital markets players, they can now tokenize an asset and put that on our blockchain, and the investor can prove that they're a sophisticated investor, that they're a US citizen, that they've got certain licensing proofs, and the investor doesn't have to re-KYC every single time across the network. So we call it verifiable credentials. So these are your proofs that you hold on the client side, And the same way you hold your phone to prove that that's your driver's license, you can do that in a cryptographic secure way on our network. So all the identity, pain and re-KYCing on every single app, it goes away on Redbelly. And so this is one of the biggest problems with real-world assets on public blockchains, because they all do KYC at the app level, and we factored out at the network level. So that's, I think, an important point to make, because when you're dealing with a bank, or you're dealing with the Reserve Bank of Australia, or any of these large institutions we're doing business with, they have confidence that everyone's accountable for what they're doing.
Yeah, the transparency and the record of everything, right? It's amazing. Right. And for any business, right, exchanges, just anyone, because we're all obliged to have AML, CTF and KYC, right?
Right.
And it's the biggest pain point of your relationship with almost any investor. So you want someone on your platform, KYC has to happen first.
Right.
And so it's always, and then once that, it's always the most biggest friction point, because everyone's like, oh, I've had to do KYC 5,000 times. You have to get out your license, you have to get out all these details. You go, it's like Groundhog's Day, you keep doing it. And it's often, if you could just remove that pain point by going, I've already verified it once, and now I have verifiable proof that I've already done it, and all I need to do is share that with you. Bang. Like, that friction point goes away.
Even getting hacked, though. Like, how many times are these honeypot silos of customer data losing, getting leaked onto the dark web? And that's because, here's something we've learned, right? Most of the companies that are obligated to KYC, you don't want to hold the data. They're required to help to get it, certainly to check it, but to even hold it. They're not Qantas are not in the business of KYC. They're in the business of flying planes. And so that's something they would prefer not to have.
Yeah, 100%. And it's such a friction point. And it's even though it's not the main purpose of why you do what you do, it's almost like a byproduct where that simple fact is like also a huge efficiency gain for whoever's participating in that network.
Big time.
Right? And that just means more people can more easily onboard, start trading. Things can move along. And so often, like even for our business, if we want to engage with a new partner, it's like, hey, you've got a great product, but everybody groans and is like, oh, I've got to go through the onboarding again, right? And we've onboarded, particularly as an individual, it's painful, but it's like 100x more painful as a business.
KYB.
The KYB, right? Everyone knows it. And like, you need a full-time person just committed to doing that KYB, not just for the initial onboarding, but then most organizations need like a ongoing
CTF checks,
right? And having that gain alone would save thousands of man hours. If you take that across the economy, across different businesses, there's hundreds of thousands of hours of efficiency gains. Right? And the crazy thing is that's almost a byproduct of what you're looking to do.
Yeah. Well, it's a necessary evil, right? So yes, a blockchain is actually what we do. We sell block space, but we've built a business that's servicing capital markets, whereas in the past in Web3 you'd see people sell the narrative but not necessarily follow through on the business part. Like they don't generate revenue, or they're not trying to solve a customer problem. It's we know what Web3 is like, and so no, I agree. I think that it's 2025. The promise of blockchain is has been here for many years, and the only way, in my view, that blockchain's going to sustain beyond bear and bull markets is by building value-added infrastructure that generates revenue, that is essential rails for capital markets, or whatever that industry, gaming, or whatever the particular go-to-market is for that chain. If their revenue is tied directly to the hype of the project in a bull market, then those projects won't last. I've seen so many cycles now, right? So they come and go very quickly.
That's a great point. All right, we have to jump in then, of course, to the main thing that you guys, well, not the main thing, I guess a really noticeable thing that you guys are doing right now is building an ecosystem, building a network. I'm not quite sure what you want to call it, but it's broadly under the term Project Acacia, which is a term that probably not many people outside of crypto, or deep, even within crypto, you have to be kind of deeper into crypto to hear about it. But it's a huge development in the Australian landscape and the adoption of blockchains. And I'll let you explain kind of maybe why that is. But I guess the interesting part is right now, we just saw the draft legislation that was handed out by ASIC. ASIC, Treasury. Our consultation period just closed for that in terms of everyone to give their feedback. But it feels like, I know we felt like we've been close to before to having some legislation and some regulation on this, but this time is different, right? Trust me.
Yep.
All the work with Project Acacia is doing is coming at a critical time. We do seem to have some clarity now at the regulatory level, or at least very close, it feels like, touch wood. ASIC has provided some leaf. There's some really noticeable Australian dollar stablecoin projects which are about to go live, right? The Treasury's looking at this, the RBA's looking at stuff, a bunch of other institutionals, and who's at the centre of it all?
Us.
Crazy, right?
We're doing a lot. Yep.
And so I feel like we're really inflection point now. You guys are not yet in crypto a household name, but probably not in the broader crypto community, and certainly not outside of crypto. But I feel like we're at a cross point where like all these things are coming together, and here he is, an Australian business right at the heart of it.
Yeah. Look, thank you for saying that. We are really clear on who our customer is. So our customer is the asset issuer. So these are traditional fund managers, these are fintechs, these are people who are generating digital assets that are looking for distribution globally under a license, and through that lowering their cost of capital. So a lot of these use cases don't need a blockchain. I mean, financial services was built without a blockchain. So the whole point of blockchain is to bring global liquidity, composability, ease of transfer, and to build better products at the end of the day. So we're super focused on taking assets that live in spreadsheets and filing cabinets and databases and liberating them into digital assets. So it's the funny thing is we're also excited about stable coins, but what are the stable coins going to transact against? Right? We've already tokenized money, and there are many forms of it, and I'll explain the difference in what we're doing. But where are all the digital assets? So what you're seeing now is a lot of obviously Web3 assets, but in terms of real world assets, the RWA category, you're seeing the treasury bills or money market funds that already exist on Wall Street being tokenized. That's the first step. But what we're seeing huge traction in is subscale issuers that are looking at things like private credit. So factored invoices or trade finance receivables and bundling these up and tokenizing them and getting rather attractive yields, and investors investing in these globally. So this is short-term commercial paper, 60, 90-day paper that you would normally have to know somebody or be ultra high net worth to get exposure to this. And so this is how the 1% invest, right? They're getting 20% on their money with a pretty safe instrument where everyone else puts it in a term deposit.
You're getting
right?
4% maybe.
But no, anyway, so yeah, those sort of assets are exciting. But what we're now seeing is those types of instruments being used as collateral in traditional things like a bond. So what one of the pilots that we're participating in at Acacia, and I'll start from the top. So we're working with a bunch of participants, but the one bank in particular is ANZ Bank. So ANZ Bank, very large commercial bank in Australia, they have an AUD stablecoin called $8DC. Now, this is essentially a ANZ balance sheet to them, right? Commercial risk. And only their customers can use it, which is fine. Now, when you're dealing with ANZ and all the other big banks, if they're all going to have their own stablecoin, they don't want to settle in each other's stablecoin. They want to use their stablecoin. So what do they settle against? Well, fiat. Well, now we're out of digital currencies, right? So the whole point of the Reserve Bank of Australia issuing a wholesale CBDC is for government money to be a digital asset that ADIs or banks can settle against. So the banks will trust government balance sheet and settle between themselves using a CBDC. That means they don't have to trust each other's money, right? And there's a very small commercial risk to these investment banks, or to retail investment banks, but it's not zero. So if you think of counterparty risk, the lowest counterparty risk there is government, right? It's the backstop. It's where all the revenue goes. They're going to step in if they have to. And so you sort of got government risk, then you've got commercial bank risk, then you go down through the stack, right? So if you think about it, Circle, there's commercial risk there. It's a company. It could go could go out of business one day. We don't know. So it's very important to distinct the CBDC is a wholesale instrument for capital markets to settle against government balance sheet, and it's not a retail thing where they're controlling what you have for dinner or something. Like these are completely different things, particularly because in Australia, payments for retail is really good. We've got Costco, MPP, real-time payments in your NetBank app. It's really good. So what we're doing in this one particular pilot is we have CBDC, which is AUD wholesale money. Then we have the $ADC, which is obviously ANZ money. And then we have an asset issuer who's pooling a bunch of construction invoices. So these are the obligations that are typically done in that industry. So I'm building a thing on a certain milestone, and as I build it, you pay me. Now, because the payment terms in that industry are typically 90 days or further, they factor these invoices. So they sell them at a discount and bring the money forward so they can obviously fix their cash flow. This is a big challenge in that industry, right? So by tokenizing the underlying invoices and connecting that to the fiat banking world, we can actually have real-time payments going to the underlying tokenized asset. We can see how the obligations are performing in real time on a shared ledger, with privacy, of course. And we can use that as collateral for a bond on the Australian Bond Exchange. So you've got basically investor money on one side all the way through to government balance sheet. And so the way I like to think of it is this sort of signalness of money. So you've got CBDC, commercial bank dollar, and then you've got an Aussie stable coin like Macropod's AUDM, which is a retail-friendly Aussie dollar. So you've got 3 different Aussie digital stable coins, and they've all got different rules and mandates. And you can move money between all of these different actors atomically, and everyone can comply with their licensing and rules. And this is all done on Redbelly.
That's incredible.
Yeah.
Yeah, and I'd love to hear from you. So, I mean, that's like a digitized version of the way money moves. And you probably you would know more about this than I do, but the current system for settlement and clearing is what?
Austraclear.
How old roughly is that system, and kind of roughly how long does it take? And
So I'm not an expert on this, but I will speak to it. So Austraclear is a part of the ASIC. It's sort of a subsidiary, if you like, or sister company, and their job is to settle the money transfers at the end of the day with the ASIC. So all the trades and all the other market participants, and it's billions of dollars a day of money that's flowing. Now, that is a rather sort of monolithic style implementation of this technology. I mean, it's not a blockchain enabled technology, but there is a cost to that, and this is all done through traditional banking, right? So there is an opportunity to add what we're doing to that stack and making it significantly faster, cheaper, and more composable. And because that money, when it's going through the financial system, it's not in your control anymore, right? So even the exposure that money gets overnight to the cash rate, that's a significant yield someone's making on that money,
totally.
right? So, and that's just in Australia. So not to mention, the markets and the sort of exposure they have to, Euroclear or other types of clearing and settlement engines around the world. So, really capital markets has been built with a lot of intermediaries, which are necessary, right? We still need them, but the sort of rules are being built around the technology limitations of the day, right? And so therefore, if we can start to make these systems more efficient, we can either lower prices for everybody, or the incumbents can choose to maintain prices and make higher margins, but then obviously the market will decide if that's competitive over time. So just like the internet improved efficiency for the way we do business today compared to paper, this is the next leg, right? And just we like to think of it as better rails.
Better rails, yeah. Yeah, so the settlement and clearing piece, which is probably the fascinating piece, it's a kind of I think you use the term behemoth at the moment now. There's a lot of reconciliation, there's a lot of moving parts. It's I don't know how quickly those settlements generally take place end of day, but even still that's a lot of manual effort and input that goes into an end of day settlement versus a completely automated, digitized atomic settlement.
Yeah.
Right.
Well, if you think about T+2, right, and it should be atomic, really. I mean, there are benefits to T+2 in terms of you can place a trade and have another trade open somewhere else and then sort of close that just in time to pay up the one you just made. And so you kind of, it's not arbitrage, but you kind of have a line of credit almost in other markets where you kind of unwind a position while you've already committed to the next, and hopefully you can make good on that. The brokers, I'm sure, enjoy that every day. But, you know, the ability to recycle capital instantly is attractive for certain use cases. And if you've got the capital now and you want to make that trade, you can. Now, here's the thing. Once it's tokenized, and this is an important stat, right? So 89% of the global securities are not used as collateral.
Right.
Only 11% is used as collateral.
Right.
And so if you think of things that are valuable, like, you know, I don't necessarily want to keep talking about real estate or housing, but let's talk about the equity in your private company, right? It generates revenue. You don't want to IPO. You don't want to take debt. You could use that in a licensed way as collateral to unlock liquidity to grow your business or to purchase another company and use that revenue to sort of make good on this. And so, you know, it's the composability of these assets, and that's, you know, we like to call it collateral portability, right? So once you have these assets in a tokenized format, what you can then do with them, you can lend and borrow against them, you can use them as leverage, you can, and none of this triggers capital gains because you're not selling the underlying asset. So that's attractive. But really, all of the participants involved in any one of these trades, they've all got a version of the truth. So reconciliation, accounts payable, accounts receivable, is real. And there's a lot of money that's spent to give confidence to the market, and a lot of prudential capital that's held in, I think ASX has like $1 billion, or I think it's even more, that's locked up that they need just in case of a backstop issue or
in case
underwriting issue.
There's a reconciliation issue.
Right.
Which is incredible. I mean, it's a huge drag. I mean, it's not like a lot of businesses want just $1 billion just sitting there unable to be deployed in something productive, right? It's just there as an insurance policy effectively against, you know, system error.
Exactly.
Yeah.
And so you can't really put this on a blockchain if you don't have confidence in it's going to be there when you need it, right? I.e., when you make a transaction and you're assuming that's completed, and then you make another transaction off that being complete, and that one rolls back.
Yeah, exactly. Which is why the earlier point we mentioned about having rollbacks is an issue. You need finality, you need immunity, you need to know that the transaction is being completed, and you need to be sure that that transaction is immutable.
Yeah.
Well, the record of it's immutable, right?
Yeah. And this is one of the reasons why we're so excited about what the Reserve Bank's doing, because if you think about it, you know, you've basically eliminated counterparty risk with the RBA using a government-issued wholesale CBDC. So there's no commercial risk there. It's as low as it can get. And then you're issuing that native asset on a blockchain that has zero settlement risk that's formally verified. And so in capital markets, these are the only two things that matter: counterparty risk, settlement risk.
Yeah, and you guys solve for that, right? Amazing. It's awesome. As I said, I really think that, you know, there's going to be a point where, like, Australia punches above its weight. You guys are a great example of this, you know, almost like the Wi-Fi. I don't know. Hopefully you guys are successful as Wi-Fi. In fact, I hope you guys make more money than the Australian government made out of the Wi-Fi deal.
That would be good.
I do actually, just in a former life, actually came across one of the public servants. So I knew the deal went through, and Australia made, given how important it is globally, Australia, I think CSR, I shouldn't say only, but it is only really 300 million out of that.
It's not enough.
It's not enough.
Yeah.
It should have been worth I don't know how much it's worth now, billions and billions and billions.
Well, if there was a company that created Wi-Fi and licensed it to every device on Earth, do you think it would be worth more than that?
Yeah, exactly.
Yeah,
exactly.
Yeah. So that for us as a technologist and you know, as Australian entrepreneurs, we want to see Australia transition towards being a country of ideas, being a country that can build, not only, you know, generate, you know, raw materials, but also turn them into revenue generating assets in their own right? So through, you know, tech companies or, you know, auto industry and these sort of value added services, I think for a country as small as us in terms of population and as wealthy and as well educated as we are, we should be able to do that.
Yeah. And I think I mentioned before, and it's probably worthwhile bringing up again, is that I do feel like Australia's at a little bit of an inflection point, partly because there has been big movements in the US, predominantly. It seems to be, you know, Australia tends to follow, but there's been, I mean, we saw Genius, Clarity, okay, there, you know, the whole onshoring of crypto businesses and support of crypto businesses in the US. It's kind of made it a little bit more like Australia's. Like, I know it's been going on, and there's been groups like, Steve Vallis' group and Decker and all these other groups have been really working tirelessly behind the scenes. But I feel like now, because it's kind of the path is cleared, right? So we're a real inflection point now. As I mentioned before, the Treasury just came out with its draft legislation. ASIC has provided relief for certain things like the stable coins, being, making it safe for people like us to list stable coins and all this type of stuff. You guys have been at the heart of that before. But where I'm going with all this, to bring it all back together, is Project Acacia brings together a lot of these different pieces, right?
Definitely.
And I think, when I was doing my research, you got like 24 projects, 19 of which are actually using real world money to do settlement. I think the difference is sort of proof of concept stuff. But I guess what I really want to highlight is that the shift has undoubtedly we've changed direction now. Digital assets is now back in vogue. People across the entire spectrum of people who are involved in the space are now going, okay, we've almost got consensus, dare I say, an agreement that we are going to do something, and this is an important technology that Australia needs to embrace. Getting back to your point, I feel like now finally Australia's like woken up, going, yes, the same things that everyone in the industry has been talking about for a while. It brings investment, it brings it brings talented people to the space, it brings jobs, it brings innovation. All these good things are now finally being recognised and going, okay, great, well, what do you need now from the government? Well, we just need some legislation so that industries and institutions can now participate, because they need to know, right, the rules. And we're really, really close to that. And I feel like Project Acacia is a great example of the closening of all those pieces coming together. I can use that term. I know it's not correct.
No, and it's fair. Like if you go back 5, 6, 7 years ago, we were talking about disintermediating everybody, which is a noble pursuit, but there's a reason why, over hundreds of years, we've built these organisations and institutions to protect mum and dads, right? We need to make sure that, we've got a stable economy. What people have realised now, because the blockchain's caught up and there's solutions around privacy and KYC and all the things that I've sort of spoken about today, blockchain isn't looked at as a disruptor of these industries. It's looked at as an enabler, or as better rails, better infrastructure for these. And I mentioned before sort of what the internet did to paper. This needs to do that to the internet. So if you think of the internet as internet of information, or the network of information, blockchains are a network of value. And so when you can do programmable payments, when you can start to give people carriage of their own digital assets, they start to be in control of their financial destiny, right? Financial literacy is improved as well. And so I definitely think that all the various people in these value chains know that if they want to be competitive globally, then they need to start to do things more efficiently and create cheap products or more efficient products. And Acacia's given all of these various parties permission to experiment in a way, right? Because ASIC's given a relief in many cases from a licensing standpoint. And it's very unusual to see the sort of names that we're working with in the room together, collaborating.
Yeah,
because
can you give us a sense of some of those names and some of those people and the types of conversations you're having? At least, definitely in terms of the attitude shift that you've seen throughout this process.
Yeah, so some of this is obviously under NDA, but I can speak to some of the public stuff. So one of the use cases we're in, which is the taking these tokenized receivables and using them as collateral for a government bond. In that, there's Fireblocks, there's ANZ Bank, there's AML, which is the second largest trustee in Australia, Perpetual, which is the largest trustee in Australia, Australian Bond Exchange, various other parties in that. And then, we've got tokenized funds. So this is a traditional hedge fund that's tokenizing their funds. So there's 24-hour redemptions and a real-time NAV, which is great from an investment standpoint. That's a fund out of Perth called Jelly C, and they're also working with the Macropod AUDM guys. There's another project around tokenized annuities, which is Imperium Markets and some other people attached to that. There's Liquidize, which are doing tokenized funds with the Jelly C and Macropod guys, just to name a few. There's Not Centralized, who were also originally involved in the CBDC project in 2023. I could go on and on and on, right? So what you'll see, there's custodians, there's stable coins, there's funds, there's banks, there's trustees, technology platforms, KYC, AML, and you need all of it today.
Yeah.
Now, the irony is if I wanted to do some of these transactions today, I would have to KYC or KYB with every single one of them individually. And that money, like it would take days for it to flow through that system. We can now do
friction.
We can do it atomically, the whole thing.
Yeah, and I don't think we can press home that point enough, that the amount of friction that you guys can reduce now is that time is money, and that friction slows down business. And in a lot of cases, it prevents business that it should otherwise be happening just from the human aspect and the pain involved in having to do this process. Yeah.
I agree.
Which is fantastic. The obviously the crypto guys, like, you know, the Jelly C guys and Macropod guys, you know, I hope they're listening, and those guys are already, I guess, deep in the weeds in terms of understanding the value of, you know, blockchains and you know, what you're doing. I'm curious from the point of view of people, you know, the RBA and ASIC and some of the more TradFis you mentioned, Perpetual and some of the other trustees and stuff that are involved. I'm interested from their point of view, because I guess they are TradFi, they've been rooted in the old world, and they're now starting to, you know, get a sense of what this new world is all about and this new infrastructure is all about. What are those conversations like? What's been the change in attitude you've seen from those guys? How are they sort of receptive? I mean, are they sort of super bullish in this, or are they kind of like still working it out? Like,
No,
where are we
very
at?
bullish. The truth is they've all been bullish for a long time, but they couldn't extend their businesses onto public blockchains because of money laundering problems.
Yeah.
So when the RBA, when they put government money on a public ledger like ours, and they send it from their wallet to someone else's wallet, the gas fee is distributed across all the node operators on our network, just like any blockchain. But if one of those node operators is a permissionless state actor in North Korea, they've just financed North Korea inadvertently through a transaction.
Yeah.
So this is why you've seen some big numbers on public blockchains in terms of real world assets, but they're not transacting. They're not doing real flow because they can't guarantee that these funds aren't going to go to people that shouldn't have them. So on our network, the key issue has been that everyone is KYB, KYC by default. And they say, hang on, so we get to have EVM tooling and all the stuff we've loved about blockchain for years, but we now have accountability. We now know that that node is running out of, you know, Sydney, or that, and if necessary, we can reveal who it is. Not Redbelly, but obviously the identity provider can do that if they need to. But there's a level of, okay, everybody here's been checked, no one's on a sanction list. There's been CTF AML checks as well. Okay, we're willing to do this, and this is why. And I'm not sure if I said this, but every other blockchain in the pilots are private blockchains. So it's not Ethereum, it's a private implementation of Ethereum. And so that for me is like the intranet. Intranet's lost against the internet, right? So closed systems, proprietary systems can't grow as quickly as open, permissionless networks that have people contribute to them for free. That's the whole beauty of EVM, right? Yep. So for us to strike that balance is unusual. And the way we've positioned ourselves to them is, well, you get the best of all the things you've always loved about tokenization and blockchain, but you don't have to give up licensing risk or KYC risk, because these entities have to report to ASIC or APRA or AUSTRAC. And if they don't know who they're doing business with, this is not a blockchain problem, this is like a TradFi problem, then they're in big trouble. Yeah. So we've given them a place to do that, so they feel much more comfortable now.
And I think, I mean, the term, whatever, it's kind of created a regulatory sandbox to actually do these types of things, and you know, businesses that want to participate, you know, certainly from, you know, even companies that want to do, say, a treasury strategy that might interact with us, you know, want to buy Bitcoin or something like that. And the reservation is always like, we want to do it, we want to talk about it. And more those conversations going, we're into crypto, we're cool with crypto, but we just kind of need to have the regulatory safe space that allows us to do this, and we don't want to get in trouble. We don't want to fall foul of ASIC. We don't want to fall foul of any rule. We're law-abiding citizens, and so we just need that clarity so we can start doing what we want to do. And I guess the value, not some of the value of what you're doing, and not by a small margin, the majority of it again, but it allows all these issues to be tested out, right?
Exactly.
And once these things are sorted out, it's going to mean that we can kind of like all these people outside of even the people who are probably even aware of what Project Acacia is, all of a sudden are going to benefit from what's happening here.
And it's great. Australia is leading in this space, which is really nice. We've always been,
and that in itself is awesome. I mean, the criticism is so often leveled at Australia that like, oh, we're leading this space. I mean, sorry, we're following this space. We're not proactive in this space. But you know what? They're in this quiet little pocket in the corner, tucked away, just like Australia is in the rest of the world. There's this awesome thing happening where we're actually leading. And sorry, I interrupted you then, but yes.
No, and I'm violently agreeing. Look, I think that, the sort of startups that get spun up in Australia are generally very capital conservative. So we don't have like the capital markets in the US, right? They'll fund anything, right? And that's fun. But in Australia, you need to build a real business, right? And so I think that entrepreneurs, and this is even my experience in venture, are far more conservative with their spends, and they really want to find product market fit as quickly as possible. Otherwise, you can't just keep going to the well and raise capital forever in Australia. So that means that the sort of projects that make it here are very well respected globally. Atlassian, Canva, and others are very good businesses because they're super lean mindset, and they build exactly what they need to build inside the money they've got to raise, and they keep going. And we're very similar in our sort of philosophy that, prove it, get product market fit, be quietly have, some of these very large institutions rely on our technology to do business better. And the rest will take care of itself.
Yeah, they're getting the steak and not the sizzle.
Yep, there you go.
Okay, so the next, again, we're all about sort of celebrating these Australian success stories. It feels like Australian businesses don't have to go internationally to be successful, but I guess just given the limitations we have with capital, like what Redbelly's doing naturally applies. If it works well in Australia's relatively small capital markets, man. What about the opportunity in the US, and which is dwarfs Australia? We're just like a little cork in the ocean bobbing around, the waves of capital that are happening in Europe and Asia and the US, of course. And so there must be sort of, I guess, your eyes set on expansion as well. Yeah.
So I think the RBA work that we're a part of has been very helpful when we're speaking to other governments globally. So I mentioned before, some of the crypto use cases don't necessarily care about all of this finality and KYC stuff because it's a permissionless network and it doesn't need it yet. But when you walk into, a government, and these are generally politicians or bureaucrats or, people that their job is to make sure it doesn't go wrong, they care about that stuff. And so they're far less likely to entertain a technology where they're going to look silly and they're going to put their capital markets at risk. So, we think that those are the rooms that are the most receptive to what we're doing, and that's why we're very deliberate about where we fit in the market. But no, the RBA has given, I think, everyone a good example of you can finally do public money in a way that works for all of us. It's exciting.
That's awesome. Can you give me some extra colour maybe around some of the projects that you're working on that aren't subject to NDA?
Sure.
I mean, the one I'm curious about, and I know this because I've spoken to some people that represent banks, and in the US we've seen this bull run has been, really marked by a huge race and adoption of different US dollar stablecoins. That's been the most green lighted, I guess, area of crypto, generally speaking, that I've seen. I've got the Genius bill and so the Clarity and all that kind of stuff. And in the US, the banks over there are rushing to create their own stablecoins.
Yep.
Right. And I don't know if I should mention who, but I've made this point a few times again that in Australia, like trade finance, for example.
Yeah.
Trade finance is a huge part of the bank's business that, maybe a lot of people aren't aware of, but basically giving people a loan so they can settle, their importing, exporting of businesses or whatever. And it's a business that by definition requires a settlement across international borders. And the US banks are licking their lips going, well, we could do this with stablecoin really well, right? And if I'm an Australian bank and all of a sudden you would certainly notice and go, hang on, shit, right? This is a big part of our business, a good part of our revenue that we care about. And all of a sudden, US banks could come and just like offer a product which is faster, quicker, you know what I mean? And if we don't pull our finger out, we're going to lose business here.
I'm nodding violently again because we've actually had a partner go live about 2 weeks ago that do this.
I guess, you know, I'm prodding and I want to know more about this because I feel like this is one, like everyone knows about the international remittance piece, but the settlement, this is another killer one that's going to be huge. I feel like it's going to be huge.
So I'll give you, talk through this particular use case. So a lot of the projects that are building on us are a group of different participants because you can't just be a single company and tokenize and do all the things you need to do. Generally, there'll be a wallet solution, there'll be a stable coin, there'll be a tokenization platform, there'll be a marketplace. So you're reconstructing pretty complex value chains on a blockchain, right? So that's not necessarily easy to do from scratch, but we've done a bunch of it now, so it's easier to onboard new use cases. This particular one, there's two partners. One is a company called Bulla. So Bulla are a tokenization platform that runs on Redbelly's network. And what they do is they do factored invoicing tokenization and amongst other things. But what they can do is you can generate a tokenized invoice and you can launch a pool to raise capital to finance those invoices. And so it's not just a pool where you pull the capital out and then spend it off chain. You literally can put your capital against the individual invoices against, say, a Walmart invoice or a trade finance invoice. And in this particular use case, the issuer is a company called Tarim. So Tarim, they have built some really cool AI-powered logistics and trade finance software. And their customers are the ones that you've just described. So they might be importers bringing produce from Southeast Asia and selling it in supermarkets in Europe. And these are great businesses. They're doing multiple $1 million a year of revenue and flow, but they're subscale. So generally in that world, you need to have done $50 million of flow to get a warehouse or to get debt funding where you can bring in institutional capital. And this is the cost of capital thing I was mentioning before. The cost to fund it is high because no one wants to fund it. And so what they've launched successfully on us a couple of weeks ago is the ability for wholesale investors to invest directly into these Bulla pools. This capital is then used by Tarim and their customers to fund the underlying invoices for these containers, these shipping containers. So they can bring revenue forward at a discount 90 days before it's due to be paid. And when that money's paid from the supplier, they pay back to the investor with a yield. And some of these assets are 20% annual yield, right? So and these are cash flow proven real businesses with P&Ls and balance sheets. And so these are the sort of private credit alternate assets that you would normally love to get exposure to if you want to diversify your investments. I mean, what are your choices today? Buying an investment property or some crypto?
Yeah,
there's nothing in the
middle. There's nothing between,
right?
That's right.
So these types of things are and these on 90 days quite lucrative, right? So anyway, so you can now fund these subscale businesses as if you're an equity owner,
which is incredible.
Without actually having to own the underlying company.
Correct, and but the infrastructure, the piece that makes this available to regular investors, or I guess mostly wholesale investors, but is the access, the infrastructure to get to it.
Exactly.
Right. They're just so rare, but now you've got a platform that actually just serves it up and says, now here's an asset class that you can invest in. It was always there. You just couldn't access it.
To give you expand on that. So we've got a wholesale investor in Australia that's invested in a pool which is run by a US company. And those funds are then used to fund European trade finance use case. So it's global commerce. It's cash finding a home for, or investment finding a home for value-adding businesses. And we're doing this for cents.
Yeah, it's crazy.
In real
it's crazy.
time.
And
it's all KYC.
It's amazing. And I think, just to bring it home to a lot of people, let's say if you're, example, you're an individual, you're a wholesale investor, you've got your super, you've got a few investments, but you've got, like, say, for example, in Sydney, typical person, you've got, like, I don't know, $3 million house or something because it's gone up in value. You've nearly paid it off and you've got a few $100,000 left, but your cost for servicing your debt is now pretty much, and you go, I'm going to start looking for investments. And you get back to this question, you're like, well, what do I do? Do I just go and buy another residential property and be like hugely disproportionately? And now 90% of my wealth is in like Sydney residential property.
And pay your stamp duty.
and pay my stamp duty. Or do I go and buy some crypto and wear the volatility? And again, like, okay, like maybe you shoot for it and maybe you're comfortable with the volatility, but there's this, private credit has definitely stepped into that void recently in Australia. But again, you've got tokenization solutions for that as well, which is fascinating. But let's say, for example, and all of a sudden you've got these short-term loans. I've got a bunch of equity in my house. I don't want to take it out and put more into Bitcoin. My job's in Bitcoin, or I'll use myself as an example. But I go, hey, well, I could take $100,000 loan, and now I can start investing in these subscale events and go. Before, the only thing I could do is sit in a term deposit, and I won't make more than my, the value of my mortgage or inflation. I can't actually get ahead. But now I can take $100,000 from my mortgage or something like that, put it into something that's generating me 20%, rolling it over. I'm creating wealth. I'm adding liquidity and I guess some capital into this underserviced market, and I'm also going to be able to grow wealth and pay down whatever's left of my mortgage quicker.
Exactly. And the best bit, the last bit, the redemption token that you receive when you take this position is collateral you can then lend against.
Here we go. And like this whole middle class of Australia now has access to a wealth creation tool that was
incredible.
It's always existed, but you never had access, not because of like legislation. The simple fact was you didn't know somebody and you didn't have the means to invest in it. And now you do.
Yeah. But even if you have
it
the
unlocks so much
house,
capital.
You can't just walk over and say, hey, this is my collateral. Can you lend me $100,000 against it? Like that instrument doesn't exist. And nor do I trust it. It's a piece of paper. Yeah. You have to do it on a blockchain. You have to do it on blockchain.
I mean, there's still to go because, I've also got to convince, and again, I'm not using my own financial details. I'm just using myself as an example. So someone who could go to, the bank, I could be like thinking through this going, hey, bank, can I have $100,000? They're like, sure. Yeah, you've got good equity or whatever. What are you going to do with it? Oh, well, crypto. But it's not really crypto. It's like I'm going to invest in
digital assets.
And then there's still this gap where they're like going, what the hell are you doing? You're going to put it all in Bitcoin or something, and all of a sudden they become less. Yep. But the reality is I'm actually putting into an income-producing asset. It's just a tokenized instrument that they are familiar with. So, but either way, look, the future is so bright, and it's such an opportunity for a bunch of capital to be put to work, allocated. And Australia, I think, has rightly probably copped some criticism, a misallocation of capital. We have such a huge amount of weighting towards banks and residential property, and such an underweighting of a capital allocation towards these mid and developing businesses. And here we go. Here's a solution. Yep. Here's a solution. I'm just going to get... our light just went off. Okay. 2 seconds.
I was going to try and let you finish, so I didn't.
No, that's all good. Thank you, Jared. You can edit it. In fact, you can just leave it in. And
I did want to add something to that.
Yeah, please do.
So that use case is... we love that use case. It's trade finance. But there's another one that's recently gone live, which is microloans for entrepreneurs in emerging countries. So this is a company called Embed, and they're based in a bunch of jurisdictions, but they do a lot in Africa and in Southeast Asia. And their current non-blockchain business is essentially lending money to the gig economy. So if I'm in a sort of emerging economy and I'm trying to be an entrepreneur, where do I get capital from, right? If I want to buy an electric scooter and do Uber Eats or something, like where's that money come from? I can't get a loan. I have no track record. And so what Embed does with another partner called Raise Finance is by taking the same global investment stablecoin liquidity we just spoke about and lending that to generating revenue for these entrepreneurs. So we're trying to directly tie investment capital to business revenue. And how would somebody who's investing in that in Singapore ever meet somebody in South Africa? They just wouldn't. So these tokenization tools give everybody the same source of truth. It connects the investment to the actual use case of that capital. Revenue flows back through. It's all trusted. It's all KYC'd. It's immutable. And you just could never do that with emails, and you just wouldn't be able to meet them or know them. So we've got countless use cases like this now, and these are sort of the sub-scale issuers. but we're going to see a lot more flow at the sort of more established end of town, where the securitization flows and payment flows and clearing and settlement flows.
Yeah, it's another sort of unsung hero, I guess, of what we're kind of in the brave new world. And one of the guys who we had on recently was talking about, in the old world, one of the challenges had always been when you're issuing credit is like whatever it was, one of the key assessment issues is you need to have like character or quality of, basically saying that track record. Whereas you need to assess is this person creditworthy, and Aave has definitely shown this, that using blockchains to keep all that record about a borrower's history and all that kind of stuff, or even just having an automated sort of smart contract, means that element is actually no longer relevant. It's all verifiable, so it's all, you don't have to actually look necessarily into the creditworthy of somebody because it has to be on. I'm doing a bad job of explaining this. Hopefully you see what I mean.
But what I'm saying is you can even layer on that extra data as well now because they're KYC'd. They literally say, this is my balance sheet, this is my P&L, lend me money at a rate. And a bank wouldn't do it because a bank isn't going to lend to someone like unsecured credit, right? So,
but now it's all automated, and you can build into the system. They're going, well, if you fall short of your obligations, well, we just take the collateral and game over. And
pretty much,
it's not our problem anymore because that counterparty risk is gone.
Yeah,
and it's a brave new world, and I think that's such a huge unlock for just a huge efficiency gains in the financial system.
I think, and you might have seen this with some of your other guests, but for a while now, we've seen less companies going public on the ASX, and this is globally an issue. It's very expensive. It's not necessarily going to guarantee liquidity. The top 200 are liquid, all the bottom ones aren't. So you want to stay private for longer. Now, same thing with these subscale asset issuers. Are they going to pay through the nose, even when they do get accepted, to get this debt and capital they require to scale, or do they look to the public market? They look to an investor base of thousands of investors around the world, millions of investors around the world, to effectively crowdfund in a way.
Yeah, well, that's what you're doing, really, isn't it?
Their assets. And so I think, the traditional funders will definitely start taking notice when they notice less people are signing up for the, I don't want to say predatory deals, but they're kind of rip your face off style pricing because there are alternatives out there.
Yeah, you hear this term a lot, the democratization of finance, and it is a great term because it is what it is, right? Because their gatekeepers are now being removed. Right? Yeah, it's fascinating. Oh, this is good. Well, Tim, we have to know what's next. What big news can we be expecting out of you out of Redbelly that we can?
So the Project Acacia pilots are all going live in the next month. So this will be mainnet, real money, real assets transacting on our network, which is exciting. There'll be a bunch of press and excitement about that. A number of our large asset issuers are now finally going into production. So we're going to, if you do watch our Block Explorer, you'll start to see crazy amounts of transactions just appearing out of nowhere. Well, that's because these businesses are finally turning on, extended their business onto our network. And that's really where the rubber hits the road for us. So that's game time. So we want to see, these use cases not just do a digital twin on a blockchain, and that's great for proof of concept. We want to see them run their core business and all of the payments and transfers happening on our blockchain. So a lot of that's going live in the next month as well. Just growing, adding more use cases, speaking to governments, and kind of selling the dream, really.
Selling the dream. All right. Time for a bit of sizzle. It can't be all steak. Sometimes you need a bit of sizzle.
Yeah.
All right. Well, one project which I know is going live very soon, and it's definitely relevant for the local market. Is I'll use the example of the Macropod guys.
Yep.
We all know who they are, Drew and Rob and everyone else who's involved in that. The Jelly Sea guys, obviously, and obviously MHC, because it's a combination of the guys, Ed Carroll and the guys over there. We're really close, right? And I'd love to hear your take on, I guess, the opportunity, but some of the challenges to getting, the Australian dollar stablecoin out there and thriving in the real world.
Yeah. We're working closely with them as well. So they're big supporters, particularly Jelly Sea and the Macropod guys. Here's the benefit, right? A lot of the stablecoins have come from the crypto side. Drew and his team are bankers. right? So they know how the capital markets works. And so the sort of use cases we're looking at together are using AUDM, but more specifically seeing Australian stablecoins be the form of settlement in these capital markets flows, and not just dealing with traditional fiat that isn't a digital asset. So you need money and the asset to be in the same ledger, otherwise the trust stack breaks down and you're back to reconciliation. So they're doing some incredible stuff on tokenized funds. Jelly C's working with Franklin Templeton, OKX and Standard Chartered, doing some really cool stuff with yield plays in the US. And we're going to see more of that appear on Redbelly. So I think keep an eye out for things like securitization use cases with us, payments, clearing and settlement, and private credit. There's a lot of that as well. So I think those guys have definitely got their head in the game, and yeah, they're definitely doing the right thing.
Yeah, awesome.
So the DFCRC are an important part of the RBA pilot as well. So they've done a bunch of research on the efficiency for the Australian economy by using distributed ledgers and blockchains. And they found there was $19 billion annually of cost savings that could be realised for the Australian economy through this use of this technology of distributed ledgers. Now, the challenge is who's going to do it, right? So you look at all of these value chains, the incumbents are built for a reason, using traditional technologies, and most of them are making this margin. So it's got to come out of somewhere, right? So the challenge is, how do you realise that benefit for them as well, right? Because they're only passing on the cost that they need to charge in order to do their business as well. So it's actually the time it takes for money to just sit in a bank account for 2 days when it should be instant. These types of situations, or the amount of capital you need to hold on your balance sheet to be compliant or have prudential controls for APRA for a bank. So this can be reused to generate revenue for the economy, and there's obviously taxpayer revenue there as well. So the DFCRC, they're a very important player in this space. They've been funded by the Australian government to go and find and work with partners who can help realise this efficiency. And I think particularly with us, where we fit in the world, that's kind of our bread and butter. That's where we see the world anyway. So we definitely are big fans of them, and we support the whole team there, and Talis and Liz and everybody else. And yeah, I think between them, the RBA and the other regulators, they've been surprisingly progressive, which has been great.
Yeah, no, awesome. We'll shout out to those guys and keep going. Yeah, awesome. All right, well, we'll definitely stay tuned for that one, because we know there's some big news coming now.
Yeah.
Tim, we could talk all day, and we do have to wrap it up, because you've got work to do. You got some steak to sell. You got some sizzle to get out in the world. But thank you very much for dropping by. I guess the key thing is, how do we get in touch with you for businesses out there who want to know and work with you guys? How do we do that?
Yeah, sure. You can find us on all the platforms. So our website's redbelly.network. We're on Twitter, Redbelly Network, LinkedIn, Twitter, you name it. So probably the best place to start is our website, redbelly.network. You can find me on Twitter at tbass, TBASS_Oz. Not hard to find. And yeah, we have an office in Sydney, a bunch of people around the world, and a community all over the planet as well. Not hard to find us.
Not hard to find. All right. And you'll get back to them straight away?
Certainly will.
You guys are ready for business.
Yep.
Awesome. All right. Well, thanks again, and no doubt we'll be hearing lots more about what you guys are doing in the very near future.
Thanks for having us.
Pleasure.
Cheers.
Done.
See you guys.